is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Zach Holman of Signed. Zach Holman has worn a lot of hats over the years. He was a second engineer at GitHub, later advised GitHub before its IPO, and now spends his time building, investing, and helping shape the startup world from a few different angles. He's the founder of Signed, a platform built for angel investors who are tired of juggling spreadsheets, scattered updates, and clunky tools. Zach brings an interesting mix of technical depth, product instinct, and investor perspective. So this should be a fun one. Zach, thank you for joining us.
Thanks for having me.
Great. Well, let's talk about your transition from GitHub executive to angel investor advisor. How did that come about?
Yeah, kind of accidentally. By the time I leaving GitHub, I had started advising GitLab and a couple other companies. And the company called me to ask to, come on as kind of an advisor kind of situation. And I realized it was really interesting. It's fun to kind of come into a new atmosphere and give some hints and tidbits and things that I picked up in my career and stuff like that. And I realized I kind of wanted to keep doing this. And in a lot of cases, like being an angel investor is just sort of being an advisor, a little bit more skin in the game type of thing. So at some point I was just kind of like, well, I kind of want to keep going down this path as I kind of explore other things as a founder and stuff like that. And kind of lumped myself into this 7 years.
Well, great. Well, you have a very interesting background. What were some of the lessons you learned from scaling developer-first platforms? What helped inform your investment from that?
It's kind of cliche. All the good things are cliche, I guess, but like team really matters. At least back when I started, it was a very unique culture of how we wanted to work, how we wanted to build our culture. So I think that is kind of the first thing I look at in terms of founders of, is this somebody who is willing to, have a vision and kind of build the company into what they want. Part of that is just ambition. I kind of want to shake some founders where I'm just like, okay, I get it, but if you're going the venture route, you have to have a really big idea of how you're going to get to like the really big returns. And that's been kind of, frustrating. Try and, reorient some founders. I'm like, I don't know, like you have a really good idea. You should really focus on making it as big as possible type of thing. So kind of the market and team is kind of the very first steps I have at looking at a new company that I'm thinking about investing in.
Great. Well, startups change over time. As you evaluate the early stage startups today, what stands out to you as being new or different?
Do I get a bonus if I say without using the word AI in this?
No.
AI is like a big deal, and it really is an actual big deal. Like the amount of things you can do now with just as a solo founder. For the longest time, there was a big question on, do we just do, solo founder? Do I want to have a team? I think a lot of that has become more accessible to even like the solo founder who just wants to get started with something. And you can, build things for the first time in a long time and get really far just by yourself and trying to get to revenue early. It's just joking with somebody yesterday about, it's always kind of been about revenue, but now a lot of it is like, well, revenue's becoming very easy to scale up really quickly in some senses. Like it's more about, what 12-month contracts do you have locked in? Because so many people are moving between companies and different billing approaches. And so it's a very different mindset of, what are you good at? Hopefully it kind of dovetails with, generating revenue, generating, profit per employee and stuff. But it's just the AI side of things, even from an investor standpoint, has been very fun and exciting and scary. Depending on how I wake up in the morning, sometimes it's like, man, we're going to kill everything. This is great. And then some other days it's like, we're going to kill everything. This is bad. So I don't know.
Right. Well, we always talk about founder-led growth, and certainly AI seems to emphasize that. Founder can really do many more things. And so it emphasizes the founder-led culture. What do you think about that?
Yeah, it's kind of, again, borrowing from like early GitHub, just because it was such a wildly, very performant culture early on. I think we all kind of had the idea of, we're kind of wearing the founder's cap, even for each of us individually. And I think that means a lot in terms of allowing your employees to sort of have responsibility to build things their own way, I think is important, which also means you have less, reliance and management of those employees. It's really hard to find the people who are really good at that. But I think, especially today, some of the best teams I've been seeing, and some of the smallest teams I've been seeing, just saying, okay, you are in charge of this part of the product. I'm going to let you kind of run this as your own mini startup or something. And, it just reduces the amount of overhead quicker. So I think like maybe the idea of the founder has kind of been generalized across an entire team in the early stages, at least, because it's, you know, you're able to do that now. You can kind of allow something to go from design to back end, front end to marketing to sales all within one day, which is kind of wild.
Well, your background makes you uniquely suited to, help, technical founders, even beyond the capital. How do you find yourself doing that?
Greatly depends on the company. Some people are just, I think when you're talking about being an angel investor, I think there's a certain amount of fluidity that's kind of needed because some companies, especially early stage, you might have to chat with them a whole bunch because they're still trying to figure out, okay, what's the positioning? How are we going to market this? How are we going to build this? How are we going to attract the right people? So sometimes it's like, yeah, I'll just, chat with you once a week or once every 2 weeks or something and really try to get into the weeds of, how are you going to build your team and stuff. And I think it's also fine to just sort of fade off in the distance sometimes because sometimes the company is so heads down on, we know what we want to do. We're dealing with this problem right now, but, we don't need you and stuff. So I think that's part of the fun and challenge, I think, of being an angel is being able to kind of sub in when you're needed and most helpful, but also not being like an unbearable presence that, maybe like a venture capitalist has a very different, if you're part of a big fund that has a big different kind of feeling with cadence of how you talk to the companies and stuff. So I think it's, I don't know, one of the more interesting parts of being an angel is trying to slot yourself in when it makes sense and, stepping back when it makes sense there as well.
But do you find your technical background gives you an edge as an angel investor over others?
Yeah. And just like talking to different investors, particularly because I tend to do a lot of pretty in-depth technical investments. And occasionally I'll talk to an investor who also is in that sort of subset of companies. And it's like, well, it's hard to even imagine you can kind of understand, the scaling problems or the technical challenges or something like that. So it's at least nice to have kind of a overall understanding and foundation as you talk to the founder. On the flip side, even a company that is going to be doing things that I've done in the past for many years, it's always a little bit different. I still come in kind of, if somebody's trying to do the same thing as GitHub was doing, a version control technical platform, as a founder, they have a very different kind of perspective than I do, which is the whole point of why they brought me on board is to kind of pick my brain when it makes sense. So I don't know, it's helpful to kind of jump in when they need it. And then again, slide out when they don't type of thing.
Right. Well, most angel investors focus on the business model, the team, those level of things, but they often miss technical debt. They miss, just current status of the product. I see many software products where they need 16 modules. They got 2 of them done, but we think they've got 14 of them done. So, it leads to a very different outcome than what you thought it was. How do you sort through that with these startups? Do you do rigorous due diligence, or do you just know from an initial glance where they are with it?
Yeah, you can kind of get a feel from various that like even outward different things, like how they build a website, how they structure it. If you do this enough, you kind of have an understanding of, oh, they're really thinking this through, or this is like, oh, clearly this is just a generated, homepage, which is also fine sometimes. It is different now because, classically you'd be like, oh yeah, you got a bunch of bad code here. You refactor it and clean it up. And, it's probably not cool to say, but like, it's a lot different now. Code is a lot cheaper. It's a lot easier to sort of do these cleanups or new features or anything like that. So I think the benchmark in how we talk about code and technical challenges for founders is a little bit different even the last year or so. It's a lot, I think it's more back kind of up market and where, you spend a lot more time figuring out, well, is this the right direction you want to head? Is this where you want to spend the next X months of your time working on this, because in some sense, anything's buildable at this point, which is both exciting and really scary. Like, fill out a prompt and you're like, yeah, now we have this feature that we talked about. Cool. So it's really, I think the technical side is how do you structure, does this make sense for you to work on as a product, feature at this point, and not getting too carried away with all the different directions you can head. So I think it's just same as it's always been, but just a little bit more cranked to 11 these days.
Well, I find over the years that every 3 to 5 years, there's a new set of tools and new capabilities that we can take advantage of. What are you seeing today? What's the evolving role of developer tools in venture investing?
It's all over the place and it's changing a lot. I think the weird part is the changing. I always tell a story of early on at GitHub. I worked on GitHub Enterprise, which was kind of our installable GitHub for enterprises. And we have a lot of companies who would be like, "Oh, we can't put our code on github.com. That's our special code. It's really important that nobody ever sees it and stuff." And we're like, well, I think that's silly, but you can buy GitHub Enterprise and that's great. And we'll deal with you for that. And now it's like people are just putting their whole code base on whatever new product is out there. It's just like click, boom, you have access to everything and it's cool and it's fine. So I think that's a weird challenge where there's not as much lock-in. And I think people correctly are realizing code doesn't matter nearly as much as what they thought it used to be. It's much more about network effects and go to market and stuff rather than just the technical, you have this line of code here that's really special. And it's like, oh, really that much special. So especially in technical, like dev tools platforms and stuff, man, there's something new every week, which has kind of always been the case, but now there's something new every week where you actually kind of want to use it. And there's a lot of pressure to get to, the latest and greatest. And you think this even in gigantic, like Fortune 50 companies, like internally, there'll be people you would not expect to be at the forefront of cutting edge stuff. They will be, yeah, we got to try it. We got to, how can we get more productive employees and happier employees and stuff. So it's, for somebody who does early stage investing, I think the most exciting time because you can finally have early stage companies who are able to sell into big, small, huge companies in a way that they haven't in the past, which is really exciting.
Well, AI changes the scarcity factor. It used to be that the answers were scarce, and now the answers are plentiful. The right questions to ask becomes the new scarcity. What's the new scarcity here in developer tools? What are we looking for now that AI has now shifted us into this new mode?
I think one of the things people have been saying more is just like taste, which is a really amorphous phrase, but like the idea of kind of having a product and being like disciplined on, this is the direction I want to head as a company. This is, there's a lot of, I don't know, fear right now of, especially for existing players, of like, do I go all in on AI? Do we go this direction? Do we go this direction and stuff? And I think a lot of it is, a couple hours to build out gigantic features with zero cost effectively, to be just disciplined enough and have a good idea of where you want to take your product. And that's kind of I don't know, I think that's a quality that's really hard to come by because it just takes a lot of, experience and ideas of how you want to build a thing.
Okay. So the right approach is the new scarcity. There's many choices. They're all easy to implement, but which one is the right one to go for?
Yeah, kind of like, this is a horrible metaphor, but like huge buffet with everything that you want to eat. Like you can't just eat it all because then you'll die. Actually, that's a pretty good metaphor. I should use that. But yeah, you're going to have to like figure out, okay, does this make the most sense? Is this the best long-term thing for our survival? Or do we just want to gorge ourselves and not actually get off the chair? Okay, I lost the metaphor. You know what I mean?
Great. Well, you spent a lot of time talking about strong culture and product focus in building companies, but how do you foster that among the companies you invest in?
It's tricky because I know it's a lot of things we're talking about, like culture, especially in startups. It changes a lot. So I'll have questions on like, oh, what was GitHub like in this case? And I'm like, GitHub in 2010, GitHub 2012, 2015, or 2026, like they're wildly different companies. So first you have to kind of identify like, okay, what stage are you? And then I think the second thing that I learned through GitHub and other companies I've invested in is you have to be really proactive about the next step. Because the whole point of like, a venture backed startup is to be really, you want to be growth oriented, right? Like the idea is that easiest is headcount is going to go up. So you're going to have more people to hire, and you will probably have a good assumption that you're going to hire more in the next 12 months, for example. It's very easy to get, fly by the seat of your pants kind of. And all of a sudden you're like, oh, no, we're slammed. We have so much stuff here. Let's just hire these people and, maybe this person, and then we'll hire these people on, and then we'll fix the stuff out later and stuff. And, we did a GitHub too, where we overhired sometimes or didn't have a clear goal of how are we going to grow the team in a smart way while still, dealing with the scale that we have to deal with and stuff. So I think that's a more, I don't know, it's frustrating sometimes because the goal is to like, oh yeah, I got to hire people. I got to hire, like my investors are saying I got to grow, my scale and my revenue growth is saying I got to grow. But I think a lot of the times you have to think like 6 months ahead of time, think like, well, assuming this growth does happen, how are we going to get ourselves in the right position to hire the right type of people that believe in like what we're building, that are not jerks, all of these sorts of things, and trying to be proactive about that is what I found to be the best way to kind of save your culture and have a good company culture. Like all the bad companies I've associated with are everything's an emergency, right? Like, oh my gosh, we have to fix this right now. Like drop everything. You got to work on this. And that doesn't do anything for, having a good company culture that will grow the company and grow the team and grow the headcount and stuff.
Well, you see a lot of founders in the angel space when you make investments. What do you see as the most common mistakes founders make in the early fundraising process?
I think like, as I was kind of mentioning earlier, at least something that I've seen a lot recently is like, you got to have an idea of how you're going to grow into, venture scale, billion plus kind of return valuation and stuff, which everybody has in their slides. Like, look, we're just going to go straight up and, we're going to be 10 million in 5 years. And it's like, okay, I get it. But when you talk to them, I don't think it becomes clear over time that like, the ones who have been through this sort of stuff before, and they understand what it actually means to build, $1 billion plus company. And I think like, we're not doing many favors to these founders either, because it's, especially angels, oh, just do a pre-seed or do a seed or do a pre-seed or something. And we're getting a lot of companies on that sort of VC treadmill earlier on, and they kind of feel locked into, well, I've got to do my seed now, or I got to do my Series A or something. And I think part of where we're at right now, and as investors, we can kind of tell people, I'm like, well, you don't have a venture scale idea, which is great. You can make a lot more money on a externally funded company sometimes if you just generate a whole bunch of money for yourselves, if you own 100%. So I think it's never been so easy to build like a bootstrapped, solid, profitable company, but it's also, in some cases, never been build a hugely successful venture scale company either. So I think like that's something I try to do more often, is kind of align founders' ideas of, is this something I should be raising money for? Or is this something I should just try to like go out and, bootstrap and own it 100% myself? I think they're both very valid. It just depends on what market you're in and what kind of target you're trying to reach in the next 7 years.
Well, you were an operator that successfully moved into angel investing. How do you coach other operators to do the same thing? What do you advise them to do?
Yeah, I wrote something about this I had one of the portfolio companies. He was talking to his investors and they were like, oh, your minimum is $1,000 check or something. That's way too low. You should move it up to 10 or 50,000 or something. I thought that was silly because in the post I was like, the minimum should be $0, because something that I've been saying, around, there's a lot of people who aren't angels, but have a crap ton of knowledge in specific industries or something. And I'm like, actually do what I did, is you start kind of talk to these founders and be like, hey, can I just get some stock? And I'd love to just talk to you and advise you and, spread that around. And I think, that's like a no brainer. It's a little bit of stock for somebody who really knows the industry or the right networks or something, at that point, it doesn't really become a dollar amount. It just becomes like how do you connect with the right people? So I think is super valuable for somebody who, they may not even end up being a professional angel, whatever that means, but, they spend their time doing, a handful of companies here and there. It doesn't necessarily mean you have to put in an entire mortgage or something just to like put into this company, but you can still share your expertise and still get some upside on that too.
Great. Well, startup ecosystems are always growing and developing. And aside from AI, what trends are you seeing in today's startup ecosystems, and what are some of the new opportunities coming up?
Yeah, I mean, it's kind of AI stuff, but I see this kind of everywhere. I do a lot of sports stuff because I own two soccer clubs, and even in sports, which has a ton of money going into it, kind of whole new ballgame now. There are a lot fresh understandings of what it means to have a soccer club, for example. And you can see this type of thing across every type of market. It's just like, how do we do AI? I think there's more readiness to invest in new products. Like we were talking about, it's a lot easier to move from something you've used for 10 years into something new. So, I don't know, like kind of across the board, I think it's just a super exciting time to be investing anywhere.
Great. And so, what's your advice for founders building in today's capital environment? I mean, if you're in AI, you're in a great spot to raise money. If you're not exactly in AI, it can be harder. And then if you are in AI, there's exorbitant expectations that come with it. What's your advice for founders today?
I think like just that number one is to make sure you're getting into what you're getting into. And I think like, yeah, having the right idea, like, is this venture scale? Is this not? Or, kick the can down the road and say, well, rather than raising a pre-seed right now, for example, maybe wait 6 months, try to get actual customers, and then see like, well, I had that optionality now of, do I just, keep it small and profitable? Do I try to swing for the fence, raise a whole bunch of money now and kind of orient yourself accordingly? Like start talking to investors now. If you think 6 to 12 months down the road, you may want to raise. I think that's also something that is, I don't know, somewhat frustrating. It's part of the game where it's like, oh, I've decided to raise money, so I'm going to start email blasting everybody and maybe start figuring this stuff out. I think that's something you can do as an employee, even. Like, I might quit in 12 months and start something. You can start talking to founders and investors, and you want to talk to eventually right now. And, the best way to raise money is to have these kind of warm relationships with these people ahead of time. Being proactive about this, I think, is the most important part. So,
Well, that's good advice. So, last few minutes that we have here today, what else should we cover that we haven't?
I mean, I'd be remiss not to mention sign.com, which is my frustrations for angel investing for the last 7, 8 years. I always wanted like a nice portfolio tool to help me with my own investments. And I don't know, the whole thing is I've gone through building this for other people. It just kind of underlined the idea of, if you are serious about being an angel, whether you use something like Signed or you're doing your own spreadsheets or something, like, you should treat it like what it is, like it's an investment. So you should start spending time figuring out, okay, where are my holdings? Secondary activity going on in my stocks? Does it make sense to sell some of these? I have some winners rather than going the long way. And I think with all of this, one of the frustrating things of, I don't know, the system is, even for investors, but also for early employees, you get the whole, oh, startup equity is just a lottery ticket, And like, I hate that so much because sure, if you succeed and you're at a good company, it feels like a lottery ticket, but these are real bets that you're making. And I think you should treat them as such. And you should, there are a lot of things, even if it is treated as a lottery ticket, you should spend some time now understanding, well, what are the tax considerations? Am I investing through, a good entity? Am I thinking about QSBS? We should be thinking about this not as a lottery ticket and more as an investment. And how do I, as an angel, effectively do this, rather than just saying, I put a couple checks in once a year, and we'll see what happens, which happens all the time, which is why people are like, oh, angel investing there's no money in it.
Right.
Not really. Or angels in general, they're just not serious people. They're not, it's like, oh, yeah, some people are, but this stuff matters to a lot of other people too. So anyway, that's my big spiel on like just worrying about how you're structuring your approach. It shouldn't be any different from how you buy public assets or index funds or anything like that. So
What's the core problem that Sign solves for the angel investor?
I was always frustrated. I've had like 3 or 4 different spreadsheets that I kept trying to, deal with over the years. They never got updated. It was frustrating. There was a new funding round. I had to go in and like track that differently in my spreadsheet. I don't know. So it was a lot of just like, where am I with my money right now? What are my strongest bets? What are, the companies that I haven't heard from in a while that will go to zero? I just wanted a better understanding of where I am because I'm up to, I don't know, a couple hundred investments at this point.
Hmm.
And it became very difficult to do that just in a single spreadsheet. So that's where it kind of stemmed from. And then I just kind of realized, wow, once you're kind of in that area, I can forward investor updates and parse out metrics and compare the revenue that you thought they would get at the end of the year to what they're actually, little things like that. I'm like, oh, wow, this is actually a fun platform to get into. So
Right.
I'm nerding out on angel investment stuff right now. So it's fun.
Well, I found spreadsheets always were limited with portfolios because they didn't have real-time data updates to them. They didn't handle stock splits well. They were too static in many ways, and is a dynamic thing where things are always changing and nothing really. You have to go manually update everything, which is a real pain. So it usually doesn't get done or done well. So just spreadsheets. I think the problem outran the solution. So kudos to you for coming up with something that does a better job at it.
I'm trying to. There's a lot of this kind of fighting the system of, we had a funding round last year. We didn't really tell our angels because, are you really investing? Like things like, what? We can solve this and stuff. A lot of that stuff I want to try and fix systematically, I guess, for everybody, but we'll see. It's fun in the meantime.
Well, great. Well, looking forward to seeing how it evolves and develops in this market. A lot of great things happening here. So how best for listeners get back in touch with you?
I am easy to find, email and stuff. I usually invest through tifo.com, so TIFO, or I'm on Twitter and all the other social things is just Holman usually. So, or they're in the show notes and stuff as well. But always happy to chat, angel with nerds who love angel stuff because, the people who love it really love it. And they have lots of opinions, which I love chatting with them about that stuff too. And yeah.
Cool. Well, great. Well, thank you for coming on the show today and giving us an update on what you're doing there. It's great work. And let's stay in touch to see what next steps bring and hope you have a good one. Thanks so much for taking time.
Thanks for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.